Yo, what is going on, team? This is Art, and I'm going to be coming at you guys with another video about common patterns in the stock market and that I use regularly when it comes to trading and using stock options. I'm going to be going over the head and shoulders and the inverse head and shoulder pattern. As you can kind of get an idea, it's going to look like a head and shoulders. So yeah, let's go over it. I'm just going to be kind of identifying it and how I would consider playing something like it, along with previous trades that I've actually taken. So I'll be going over a few of my trades and a few of the potential trades that I plan on taking in the future. That said, let's get this thing going. So firstly, I just want to go over this trade right here on Facebook. So we have our first shoulder right here. Here's our head, and here's our other shoulder. And we had a break below the 200-day moving average, which launched us even further down. So notice right here that we have kind of a flat-ish plateau area for our first shoulder. This is pretty much that little, consolidation before a breakout. And then you have your head. So that would be this huge breakout to the upside, and then you kind of hang out towards the top. And then you head back down to form your next shoulder. That's right here. And then we head lower once we break that double bottom right here. But in this case, you would have wanted to enter on the break of the 200-day moving average. That's our little red line right here, to a lower mark. I'd like to use whole numbers if I don't really know where the stock can go. And that's typically a good practice that I go by. So notice right here, again, we have that head and shoulders. So this thing just launches Facebook low, and it kind of gets scooped up, and that's where it's sitting at right now. And overall, that's just how I played Facebook. That was earlier last week. Here's again something else that you can keep in mind. So here's NQ/NQ. This is Nasdaq futures. This is as of right now, March 7th, 2021. Notice we have our inverse head and shoulders forming. This is what I'm actually playing on going into tomorrow. I think we'll have either a flat or a slightly green day, or a slightly red day, actually. I apologize. So notice right here, we have our first shoulder. Here's our head, and here's our second shoulder forming. I would like for it to hold this 50-day moving average and kind of end up a little flat to red tomorrow, and then we end up eventually going to the 200-day moving average. That's how I would play this, personally speaking, at least. And overall, you can kind of see that same little pattern that we saw earlier on Facebook, but flipped upside down. You can also maybe consider this to just be a rounding bottom, but overall, you can very clearly see shoulder, head, shoulder is a very common pattern that you see throughout the day. I personally use 1 hour, 4 hour, or daily charts to play this. And that's how you would identify it and how you would play it. So what I would do here in this case scenario is watch the 50-day moving average at 12,500 for NQ. And I would be being patient on buying call options for QQQ if we can see this thing hold on to that 12,500 area. If not, that would be considered a break of formation, and you would either just not play it or you would wait for a put entry. That said, here is the 4-hour chart for Amazon. And with Amazon, it's been getting beat up like crazy recently. We had this massive H pattern that formed, and I think I went over this on one of our recent videos, which is what helped me kind of figure out this market drop continuing to the downside when some people were thinking to buy the dip. But here we go. We have a 4-hour chart on Amazon. Overall, it's again pretty bearish, but we are starting to see a little bit of recovery along with this MACD crossover and an RSI being reset from the oversold. So notice we have our first shoulder, we have our head forming. I would like to see Amazon kind of near this 3,100 mark, at least break above this 3,040 mark. And above there, I apologize for the background noise. My little brother has friends over. That said, though, above 3,100, I think we can see this thing kind of rip back upwards to this 3,200 if we can see this head and shoulders come to fruition. Otherwise, I don't think I would be playing Amazon. That in mind, though, I will just pull up a random chart from my watch list. Let's just pull up Lemonade, and let's see if we can identify any sort of head and shoulders pattern. I think I see one right here at the very beginning of the hourly chart here. So we kind of have a little bit of a head and shoulders that started forming right here. Here's our first shoulder, here's our head, here's our second shoulder, and we fell. And especially below the 200 SMA, we saw this thing even become an H as we tried to break back above the 200-day moving average. And from there, we rejected and headed even lower And notice that the 200-day moving average did become a ceiling for us. So that in mind, we continue to head even lower as we now have a moving ceiling being the 50 SMA, and we continue to get pushed even lower, even lower, even lower. And as of right now, we are trying to form an inverse head and shoulders with the reversal pinged at 87.92. That's just something to consider when it comes to taking a trade. I personally use the 9, 20, 50, and 200-day moving averages when it comes to trading in the stock market, because they are kind of just a general idea of a support or resistance line. That in mind, I think that is one of the more important things you can use when it comes to trading, because the majority of people use it, and I guess you kind of have that little bit of a confirmation bias. And on top of that, using common patterns like the head and shoulders, bull flag, bear flag, and like H patterns are very useful because of being able to identify them quickly can lead to very lucrative plays. So, you can see the head and shoulders, shoulder, head, shoulder. We break above the 200 SMA. This becomes an H, and we continue to head even lower as soon as we break the double bottom of the H pattern. That's just another quick way of using this in a scenario. You would be taking a put, maybe down a couple dollars. So, again, you have the put. Say you look for that double bottom at 240 or at 147. And so I would take maybe 150 strike puts with 2-week expiry, 3-week expiry. And I would take profit, say, around whole numbers. So 145, 143, 140, and lower. And notice, again, we have that rejection of the 200-day moving average. We continue to head lower. And that would be, of course, where you would be reloading on those put options. I think that's going to be concluding today's video. I appreciate you guys for watching. Feel free to drop a like, subscribe, follow, and overall I hope you get a solid amount of information from these videos, because these are simple patterns that you can add to your arsenal that do end up helping. As you can see, you can kind of identify these things and watch the trend kind of happen. Obviously, it's not going to be a 100% kind of thing, but it is something to have in mind when you're trading throughout the day. And when you notice them, it is very important that you keep an eye on it, because it could be against your position, and that would be not very cash money. That said, I will catch you guys later on tomorrow's video. I hope you guys watched Sunday's watch list. We did very well, and I took a lot of names from you guys, and I appreciate everyone who had taken the time to do so. I'll catch you guys. Have a green week. I'll catch you later. Peace.